Good afternoon, everyone, and welcome to 2026 and beyond practical strategies for navigating global financial crime regulation in the AI area. My name is Adil Sassa, Vice President of Solution Consulting at ThetaRay, and I'm joined by Ye'ela Harel, our financial crime expert working closely with regulator and institution globally. Hello, Ye'ela, how are you?
Great. Hi, Adil. Nice to be here.
Nice to have you on our webinar. Okay, today's conversation is not about just regulation. It's about how compliance leaders can stay ahead of while maintaining commercial agility. So in 2026, we are seeing three forces converge. Intensifying global regulation pressure to use AI. This mainly comes from the EU with the AML package and MLA. AI governance expectations are also coming from the EU with the AI Act. And this is influencing other jurisdictions such as UK, US, and some APAC jurisdictions as well. The second one is the rapid evolution of financial crime, faster, more cross-border, and increasingly synthetic. The last one is the growing pressure on banks to make decisions faster with fewer resources while being more and more explainable than ever. So today's objective is to make this practical, what's changing, what AI first really means, and how institutions are preparing right now. So to start with, Ye'ela, what's the state of the financial crime in 2022? What is changing?
So thank you, Adil, and again, great to be here. Let's dive into what's actually shifting over the next year or two. When we look toward 2026, we aren't just looking at one specific regulation or a single region. We're seeing a massive global shift in how financial crime risk is supervised. Starting in Europe, EMLA, as you all know, the Anti-Money Laundering Authority, is finally becoming operational. This moves us towards a much more centralized model where the expectations for transparency and consistency are higher than they've ever been. If we move across the Atlantic, in the US, we aren't seeing just one single AI law. Instead, regulators are sending a message through enforcement and supervisory guidance. They're really focusing on three things. First, the model risk management. How are you governing these tools? Then there is the outcome transparency. Can you explain why a decision was made, not just the math behind it? And finally, I think they're looking for real impact. They want proof that AI is actually catching more crime, not just helping you clear your alerts faster. The US expects AI to play by the rules we already have, for example, SR 11.7 and BSA AML obligations. In their eyes, AI must be controlled, documented, and fully auditable. There are no shortcuts here. If we're looking in the UK, the FCA and PRA are doubling down on responsible AI. They're asking, if your system makes a decision, is there a human in the loop who can actually challenge it? Accountability and operational resilience are the focus here. Turning to APAC, specifically Singapore, Hong Kong, and also Australia, we can see regulators are in this interesting position where they're actively pushing for advanced analytics, but they're also raising the bar for governance at the same time. For example, the MAS in Singapore has been very clear. They want you to innovate, but only if you can prove you have a handle on explainability. And finally, In the Middle East, especially the UAE, we're seeing a huge acceleration. They're essentially leapfrogging by importing the best parts of both US and EU frameworks, with a massive focus on digital transformation and managing cross-border risks. But see, here's the reality. The threat landscape is moving even faster than regulators, as always. Right now, we're up against synthetic identities being created at an industrial scale. We're seeing digital mule networks that don't care about borders. And of course, criminals using AI themselves to mimic normal customer behavior so perfectly that the static old school rules just can't catch them. This puts compliance teams in a pressure cooker. You're being asked to make faster decisions, cut false positives, and cover more ground, all while staying 100% transparent. So I guess the truth is that the traditional rule-heavy approach is hitting a breaking point. The next 2 years aren't just a challenge. I know they're going to be an opportunity to fundamentally transform how we handle compliance.
Yeah, thank you very much for that overview, Ye'ela. And actually, that's true that AI now and the AI first era for compliance is starting right now. But before we going into how to do it, etc., let's talk a bit about what does it mean, what AI first means in this regulatory environment. So when we say AI first, it is important to be very clear about what we mean and what we don't. Legacy compliance approaches are rule first. Risk is defined to static thresholds. We all know that, scenarios that are hard-coded. And when AI is used, it is bolted to later to clean up the alerts. So the incremental approach improves part of this, of course, but maybe adding machine learning to prioritize alerts, but the core logic itself remains rules-driven and fragmented. Okay, so an AI-first approach is flipping that model. The risk detection is natively driven by the AI model that learn behaviors, relationships, and context across the entire customer lifecycle. And the rules still there, but they are supporting the AI. They are not the other way around. So the result at the end of the day is a system designed to understand risk holistically rather than react to isolated signals. So one of the biggest misconceptions is that AI reduces alerts by suppressing them. Well, in reality, well-designed AI-first platform reduces alerts because they detect risk more accurately. Traditional system generate alerts whenever a rule fires, even if the signal is weaker, repetitive, or already known. Unified AI platform evaluate risk across multiple dimensions simultaneously, like transaction behavior, customer profile and history, network relationship, peer group behavior, or cross-channel activities. So this allows the system to distinguish between truly anomalous behavior and normal but noisy activity. Low risk activity never becomes an alert. High risk becomes one with stronger confidence. So the alert reduction by itself is a byproduct better decision, not a risk tolerance. So AI first compliance also changed how the investigations are conducted. So today, many investigators spend most of their time collecting information, pulling transaction history, checking profile, reviewing leaks, adverse media, and so forth and so on. In an AI-first model, this work is done upfront. Investigators, they are not, as I mentioned, collecting those information on that stuff. They are presented with clear risk narrative, key contributing factors, relevant connection and anomalies, comparative behavioral context. So human judgment is still there. It doesn't replace human judgment. It enhances it. So the shift is that investigators move from data gathering to decision making, from reviewing alerts to validating risk. And that's an important change. What the result is at the end of the day is the decisions are fast, they have better consistency, at the end of the day, better outcomes and greater explainability. It is often misunderstood as needing to explain the math behind the AI model. That is not what the regulator is asking for. Regulators want to understand four things. Why was this entity or transaction flagged? What data was considered? What factor increased or decreased risk? And how did a human validate the outcome? So in practice, explainability means providing a clear, traceable rationale for every decision. These can include, for instance, risk drivers and behavioral anomalies, peer comparison, network exposure, historical context. But crucially, explanation must be consistent across cases and reproducible during audits. When it is done properly, explainability becomes a strength and not a burden linked to compliance. As explainability requires how human validated the outcome, AI first cannot mean AI only. Human oversight is not optional, it is foundational. This means that leading institutions would need to transform their governance model into embedded clear ownership and accountability, to having model validation and monitoring, to be able to define escalation and override mechanisms, and at the end of the day, having ongoing performance and bias checks. And at the end of the process, the humans are responsible for taking the final decision, being accountable towards regulatory requirements, ensure ethical judgment, and embed continuous improvement. So the new governance framework is what gives regulators confidence and allows institutions to scale AI safely. When AI first compliance is done correctly, it delivers three outcomes regulators care about most: better detection, clearer decision, and stronger control. So now that we have talked about the challenges for 2030 and above, and the AI first definition and area and what it implies, the question now to you, Ye'ela, is how the leading institutions are preparing for that, for 2026 and above.
Yeah, so I think one of the most important shifts we're seeing right now is the move away from what I call fragmented detection. Historically, banks have managed AML, sanctions, and customer risk in completely separate silos. You had different tools, different data sets, different rules, and even different teams that rarely spoke to each other. So nowadays, leading institutions are moving away from that fragmented approach and unifying those signals under a single risk engine. Now, I want to be clear. This doesn't mean you have to rip and replace everything overnight. It doesn't. Instead, it's about creating a central intelligence layer. This is a layer that sits above your existing system and can see behavior across every product, channel, entity, and geography simultaneously. That's an amazing improvement. And why does it actually matter? Because financial crime doesn't operate in silos, and neither should your detection, of course. When you unify these signals, you finally get a true end-to-end view of the risk. You can see how a slight red flag during onboarding actually evolves into suspicious transactional behavior 6 months later. You can see how one piece of activity correlates with AML risks and how criminal networks are stretching across your entire system. I think that by 2026, this unified view won't be just nice to have. It's becoming essential for effective detection and quite frankly, for your regulatory credibility.
Yeah, absolutely. And going to the effective detection, I believe that the second major shift is how the detection logic itself is evolving. So again, rules are not disappearing, but they are not longer the primary driver for risk decisions. The leading institutions are moving towards hybrid model, AI-driven behavioral detection combined with domain-specific reasoning. So the AI excels in identifying complex patterns, anomalies, and relationship at scale. Things that humans and rules simply cannot define in advance. Domain reasoners, on the other hand, they encode regulatory knowledge, the typologies, the institutional risk appetite. So having them together, it creates systems that are both adaptive and controllable. So a combination, of course, that the regulators, they are expecting more and more. So this approach, at the end of the day, reduces rules sprawl, it improves coverage, and it significantly lowers maintenance costs. Just let me illustrate what we just said, Ye'ela and I, two of our customers. So what we have seen at two of our customers, the first one is a large international bank that unified its transaction monitoring, the customer risk scoring, and network analysis into one single AI-driven engine. And the result was that not only they had fewer alerts, but significantly stronger high-risk cases and clearer narrative for investigators and, of course, for the regulators as well. The second one is an international payment provider that use AI to replace hundreds of brittle rules with adaptive behavioral models. So, and within months, they saw improved detection of previously missed typologies and, of course, a faster investigation cycle. So through this example, we can see that across region, Europe, North America, APAC, Middle East, the pattern is the same. Institutions that are unifying data and intelligence, they make decisions better and faster. And by the way, this is not experimental. This is not piloting or whatever. These are production systems driven by regulatory and operational necessity. Now that we have talked about that, how do we make that more concrete, actually? In my opinion, in 2026, the biggest compliance risk won't be, and I might be a bit disruptive there, the financial crime itself. It would be pretending that manual controls can keep up with it. Let's be honest, okay? Most compliance framework today, they were built for a pre-AI threat landscape. They rely on static rules, retrospective reviews, and human capacity that simply, at the end of the day, doesn't scale. So the regulators, they know this, and increasingly they are expecting institutions to modernize. But does an AI-first regulatory-ready roadmap, how does it look like, basically? So, okay, first, there is a need to stop treating AI as only an efficiency project. So if AI is positioned only as a cost reduction tool, it will fail regulatory scrutiny. Regulators, they don't care about how fast your alerts are closed. This is not their business. They care whether the risk is genuinely better managed. So the AI must be explicitly tied to regulatory objective. Earlier detection, deeper typology coverage, and fewer blind spots. If you can't articulate that link, you're already exposed. Secondly, accepting that black box compliance is no longer defensible. The area of, trust the model, that's over. Regulators are moving from asking what decisions were made to why they were made. That means, again, as I mentioned before, explainability, it is not a feature anymore. It is a control. And AI systems, they must produce narrative that the regulator can follow, not just a score investigation can action. If you can't explain an AI decision under challenge, you don't own the risk. It's the model that does. The third is redefine human oversight before the regulator do it for you. So human in the loop, it's not a slogan. It must be a design responsibility model. Who is validating the model? Who is challenging it? Who signs off when AI is wrong? So the regulator will ask, and the system decided will be an acceptable answer. Institutions that fail to assign accountability will find that accountability assigned externally. So the fourth one is to build a governance as a growth strategy, not as a compliance tax. So the firms scaling AI successfully aren't moving faster because they have fewer controls. They are moving faster because governance is already embedded. Model risk management, bias monitoring, and audit trail, and regulatory reporting are built into operation from day one. Without this, the AI innovation stalls at the first supervisory review. And last but not least, the design for regulatory acceleration and not regulatory stability. So the financial crime regulation, it's not going to slow down to accommodate legacy systems. AI-first compliance means building adaptive, continuously learning controls that evolves with typologies, sanction regimes, and supervisory expectation. So I would say that in the AI area, compliance maturity will be measured not by how conservative you are, but by how confidently you can explain, defend, and involve your decision. So let's go to the final outlook and what is going on now in this year and what is going to go beyond. So Ye'ela, just if you had one mission that you want to take away, what would it be?
Yeah, so I completely agree with everything you said about accountability and about the human in the loop. It's super important and it's critical. But I would like to add that if there's one more message that I want you to take away from our session today, it's this. I think that the future of compliance isn't just about reacting faster, it's about predicting earlier. Because as we look toward 2026 and beyond, we are witnessing a fundamental structural shift in how we work. For decades, as you all know, compliance has been a reactive function. We've been designed to respond after a risk already showed up. We all know how it goes. An alert fires, human reviews the case, and a report is filed. We've basically been looking in the rearview mirror. And I believe that AI can fundamentally flip that model. By using predictive analytics, behavioral pattern recognition, and adaptive risk scoring, we can finally identify emerging threats before they turn into regulatory failures. And that's super important. I want to be clear, this isn't about getting rid of your controls. It's about moving those controls upstream. It's about shifting our focus to where prevention actually happens rather than just cleaning up the mess after the fact.
Yeah, absolutely. And I will emphasize also with that, with the other part, which is, in my view, the AI-assisted investigation will become the industry standard. Again, manual investigation, they are no longer sustainable in a world of growing transaction volumes. So faster payment rails, increasingly sophisticated crime, so they cannot scale. AI are not going to eliminate investigator, but it will redefine their role. So investigators will become decision makers, not data gatherers. And they will be supported by AI that prioritize the risk, the surface the context, and explain why a case matters. So I think that in 2026 and beyond, institutions will still relying on fully manual investigation. They will be operating at a structural disadvantage.
I think we've talked about the intelligence gap, and I think that by 2026, unified data and explainable AI will be what separates the leaders from the rest. The institutions that succeed in this new era won't necessarily be the ones with the most data. They'll be the one with the most connected data. So when you can take transactional data, customer behavior, and external intelligence and interrupt them through explainable AI, then your compliance posture becomes both stronger and more defensible. That can give you a dual advantage. You get better risk detection and you gain massive regulatory confidence. I believe that regulators in 2026 are going to reward institutions that can actually explain their decisions rather than just showing the final result. And finally, I believe that 2026 is going to be the tipping point. This isn't because of one specific law, it's because of the convergence. We are seeing regulatory pressure, technological maturity, and criminal sophistication all accelerating at the exact same time. AI financial crime prevention is no longer a pilot project, as you said before, Adil. It's not an experiment, it's becoming the expected baseline.
Yeah, absolutely. And so the real question is, actually, it is not, are we ready for AI? It is, are we ready to defend our compliance decision in an AI-driven world? So the call to action now is simple and immediate. Assess whether your current compliance framework can explain, audit, and defend an AI-driven decision. And align the technology, the compliance, the risk team around a shared AI governance accountability model. And of course, you need to act now before regulators and criminal force the transformation of your timeline, not theirs. So as a word to conclude, I would say that the institution that move first, they won't just keep up with the regulation. They will help defining what good compliance looks like in this AI area that we are all living in now.
Absolutely.
All right. So we had a few questions from the audience and the panel, and thank you very much for that. So I'll just take a couple of them and let's have a look at them and try to respond. So first question, and I think it would be good, Ye'ela, if you can leverage on that one or talk to that to that one, is how do regulators they view the AI first approaches today?
Yeah, okay, that's a good question. So I believe that regulators are not against AI, they're against uncontrolled AI. The message today is use AI, but prove governance, accountability, and explainability. Performance alone won't be enough anymore. Supervisors will focus on who owns the model, how decisions are explained, how data is governed, and how models are monitored over time. So institutions that treat AI as part of their control framework, not just as technology, are viewed far more positively.
Absolutely. Yeah, absolutely, absolutely. Second question that I picked up: how can banks meet explainability expectation, especially under the EU AML package?
So explainability means being able to defend your decisions, not explain the math behind them. So, under the EU AML framework, banks must show why an alert fired, what data was used, and how humans remain accountable. This requires decision traceability and clear documentation that can be provided to auditors and supervisors, and also evidence that AI improves AML outcomes while remaining controllable and testable.
Yeah, absolutely, absolutely. So I think I'll pick up that question. So how can AI reduce false positive without increasing risk? Yeah, that's the heart of the problem, right? So you don't reduce alert by lowering thresholds. Yeah, you reduce them by improving your precision with controls. So AI, it prioritizes risks and add context, as while human and guardrails, they protect against missed risk. So most banks, basically, they start with an AI-assisted triage and enrichment. They run the models in parallel with rules, and they measure the outcomes like recall and SAR productivity. So the risk is controlled through conservative segments, QA sampling, and override mechanism. Okay, so
I'll pick another one.
yeah, sure.
Okay, so let's see. Oh, here's one. So, what skills will compliance teams need in 2026 and beyond? Okay, so let's be honest, compliance teams won't become data scientists, but they must become AI literate risk owners. Um, I believe that understanding data, model outputs, and governance will be essential. Key skills will include data literacy, model risk basics, and cross functional collaborations. Compliance becomes more analytical, less manual, and more decision driven.
Yeah, absolutely. Yeah. Okay, so let's see a couple more. So are there risks, sorry, of model bias in financial crime detection? Yeah, that's a good one. Of course, yes. And the regulators, they expect the banks to actively manage it. So bias, that usually comes from historical data and proxies, not by intent. So control, when we control is, they include bias testing, first by segment. So explainability to detect the proxy features, independent validation, using challenger models, for instance, and clear governance. It will triggers when drift or imbalance appears. Okay, so all of these controls would help to fight the biases, but you cannot basically work without any biases. Another one. So, what is the biggest obstacle to unified AI-first compliance? Yeah, that's a very good question. So, actually, I think that this is not the technology. It is fragmented data and probably fragmented ownership. So, AI, it exposes operating models' weakness very quickly. So, siloed systems, inconsistent identifiers, and unclear accountability, they undermine the AI effectiveness. So regulators, they increasingly view data governance as a prerequisite for credible AI adoption. So basically, the biggest obstacle is having data scattered all over the place with weak governance. So having a strong governance and unified data model or data lake or something is going to be the answer to avoid that. So let's pick a final question, conscious of the time. So what does a realistic 12-month transformation look like? Successful banks, they don't replace everything at once. Okay, let's forget about the big bang approach. So they deliver the value early, while the governance runs in parallel. So the first year would be focused on data foundation, the AI-assisted triage, the parallel runs, and the supervisory-ready governance. The full replacement, though, is incremental, but it's measurable benefits that appears within months. So you start slow, you grow, but you see going over and over again that you have more and more benefits that are coming through. And with a strong supervisory-ready governance, that's the key to have something that it's really transforming your area, your current compliance into the AI-ready area. Okay, so that concludes our webinar. Again, Ye'ela, thank you very much for participating into this, and thank you for all our watchers for that webinar. You will have the link in the description and in the webinar below if you'd like to pursue that discussion with us. We wish you a very good afternoon, and again, thank you very much for your attention.
Thank you, Adil. Thank you, everybody. Bye.